Thank you, Antonina. Thank you, Natalia, for the presentation, short presentation. In fact, right now I've been at my university. So here you can see the building where I'm sitting right now. So this is the view of Wrocław, and in fact there's one building from my university. So I would like to invite all of you to come one day to Wrocław, to my university, and maybe we will start a cooperation. And we've started cooperation with some people from your university. So I've got plan for the extension of that cooperation, but we will discuss it later. So today I would like to present you some information concerning some issues from accounting, from balance sheet, and in fact we will just describe some details, some differences between IFRS regulations and the regulations that are currently in Poland, and maybe you will just learn some interesting thing how we carry on the accounting in Poland, how we classify assets, how we measure them, and in fact in many fields there's some strange, even for me, methods of classification, but I will just introduce all of them to you, and maybe you will find them similar to what you have in Ukraine. Maybe you will have some different methods of classification, different methods of measuring at the balance sheet date the information about assets and liabilities. Okay, so let's start from the content of my lecture. So in fact, first of all, I will describe the legal basis of accounting in Poland. Then we'll go to accounting principles, which are almost the same, and I think they're the same as we know from IFRS, International Financial and Reporting Standards, and probably you've got the same in Ukraine. So we've got the same accounting principles. Then we just move to financial statements that are in Poland. The definitions of assets, liabilities, profits, costs, and the recognition in financial statements. Then we move to details, how we measure, how we show the information about intangible assets and tangible assets, property, plant, and equipment. Then we go to current assets like inventories, investment, long-term investments, short-term investments, and at the end, some information about receivables and liabilities, especially those which are connected to financial segment of the company, like liabilities from leasing contracts or some credits, or receivables, also some loans, some investments in receivables. So this is the main content of the lecture. So before we start, what are the legal bases of accountancy in Poland? The main law, it's the Polish Act of Accounting, the Accounting Act. So this is the act which describes everything what we do in accountancy, and some details concerning bookkeeping, concerning valuation, concerning some disclosures in financial statements are described in national standards. So we've got also a list of national accounting standards. And at the end, when we don't find the information how to recognize, how to disclose the information about assets, liabilities, profits, costs in financial statements, then we can move to IFRS or International Accounting Standard. Of course, some companies which are listed on the stock exchange in Warsaw, they can use IFRS. But for the majority of companies, we use the Accounting Act regulations and national accounting standards. So before we move to more details, let me introduce you some short description about assets that we can have in our company. So imagine the situation that you are running a business, it's kind of zoo or safari. So you've got different animals like elephants, some birds, lizards, and the question is if you can recognize them as assets or not. What do you think? What is the definition of assets in that case?
Well, the definition of asset is something that can make profit for you. And in case of animals, there is a specific like terminology like biological assets, long-term biological assets, something like that. So in this case, maybe like, I don't know, if these animals, your business is something like zoo, then these animals can be considered as assets. But if it's like farm, and elephant cannot be a farm animal, then it is not an asset.
Okay, thank you. So definitely the most important thing is, or one of the most important thing is that assets means that we've got a kind of resources which have benefits for us, and those benefits means probably cash in the future, or that they are interchangeable into other assets. But to recognize those animals as our assets, we need to also control the profit. So if there is no fence around the area where we are trying to run the business, then we do not control the profit, we do not control animals on that field. So before we build the fence, those animals which are inhabitant in that area, they are not our assets, because we need to prove that we control benefits, we control profits from these animals. So let's build the fence. Okay, right now we've got animals in surrounded area, so we can say that we control these resources. Except animals, we have building as the example of asset, because we control the resource, and we've got a land. So in that case, we've got three types of different assets: property, land, and animals. So in order to recognize in order to present information about our assets in financial statements, except the fact that we accept profits from that resources, we control the profit, we need to also measure the value of that animal. So, value. Without good methods of measuring, we cannot show any financial information about our assets. So, how we can measure the value of building? How we can measure the value of the piece of land, and how we can measure the value of animals? In case of building, it's pretty simple because we can measure it with manufacturing cost, the cost that we carried on to build walls, roof, and so on. We bought the piece of land, so we've got the initial purchase price of the piece of land. And what about animals? How we can measure the value of animals that we have on our property? Who can just provide me some way how to measure the value of animals in that case?
Well, I guess just about for expertise.
So we can buy this kind of animals, so we can have a kind of purchase price. But what about the animals that lived in that area, that were inhabitants in that area? We can receive a kind of expertise. We can receive the value from the market, for example. So we need to evaluate, we need to assess the best way to present the information about the value of our animals. In accounting principles, we have the most important principle. It means true and fair view. So when we ask the expert what is the value of the elephant, and he or she says 100,000 euros, and if we find a market for the animal and the market price will be 75,000 euros, how we can judge, how we can decide which value is the best for us? The higher or the lower? So we need to judge. And in Poland, we've got a kind of principle called prudence principle. And in fact, in that case, most Polish accountants would decide to take the lower price. So we are not going to overestimate our assets and underestimate our liabilities. So someone said that we've got here some biological asset. It's very complex sphere, because imagine the situation that we've got newborn elephant. What is the value? How we measure the value of newborn elephant? And there's also in Poland the problem with valuation, with recognition of biological assets. And in fact, we've got very detailed description how we should present the information about biological assets, and they are described not in the Accounting Act. So they're described not in the main law in Poland, the Accounting Act. They are described in national accounting standards. So national accounting standards in Poland are used for presenting, for providing us detailed information in some difficult, some problematic spheres in accounting, like biological assets. When we see the factoring, these are some screens from the game that we've prepared for our students. And when we see, for example, at the building, can we recognize the building or all buildings that we use in our production as the fixed asset, as the tangible fixed asset? Or not? What do you think?
Why not?
Why not? Okay, so basically in Poland, we've got a specific rule for fixed tangible assets. And we can recognize and we can present some information about property, plant, or equipment only when they are complete. So when there is a building in progress, we cannot show them as the property, plant, and equipment. It's tangible asset under construction. So except the definition of assets, that there are resources with benefits, with some profit hidden, with the value, we've got some specific details concerning specific items of the balance sheet. And for example, for fixed tangible assets, they must be completed. So when they are in progress, we show them as the fixed assets in progress, not as the property, plant, and equipment. And before the fact that they are completed, we can start. So before, we cannot start depreciation of that asset. After that, so when we decided the manufacturing hall is finished and we can start running business in that building, after that, we can start depreciation, the usage of the asset. Except the building, we've got also some assembly lines, so some other assets. And except the physical assets, we can also use some intangible assets. So the assets that doesn't have the physical. And in that case, for example, in the assembly line, when we use some software and we use probably some robots to collaborate with people in assembly line, we've got some other specific rules in Poland, especially in Poland, because they are not in IFRS regulation. For example, some development of assets. In case of intangible assets in Poland, we cannot develop them. We can present new intangible assets, but we cannot include some cost of research, of development, of existing intangible assets. So when we've got a software for production line, and we decide to develop it and put some other modules for better quality, even for better quality of production line, for better quality of products that we maintain, those development expenses do not increase the value of existing intangible assets. We cannot. We can put them directly as a cost in P&L account, or if this development meet the criteria of asset, of new asset, we can recognize it as a new intangible asset. In the case of tangible assets, we can develop, we can rebuild, we can renovate them. And when there are some development expenses, they are added to the value of existing tangible asset, and after that we can depreciate, we can amortize the value with development costs. And next thing that I would like to just point out on this slide refers to inventories, to some parts of the car that we need in our assembly line to assemble the car. So the body, wheels, doors, windows, and the engine. And when we've got interchangeable inventories, for example, wheels, all wheels have the initial value that were at the purchase day. So mostly it's the acquisition price, mostly it's a purchase price. And in some cases, it could be different price for the same wheel. For example, one day, today it's the end of November, the price of the wheel is around 100 euro. 2 days before, the price of the wheel was lower, so 95 euro. And when we use one wheel in the production line, what is the value of the cost of wheels that we put in our manufacturing process in our car? Who can provide me the value of the cost of one wheel that is used on the production line? Is it the value of 100 euro, or maybe 95, or maybe average, so it's 97.5 euro, or maybe some other value of the cost?
Well, I think that the price of its wheel is accounted as a balance price. And if it's 100, I think it's 100, not the market one, but the price from the balance sheet.
Okay.
I think that it depends on the method that we have chosen for calculation the maybe value that will be included to the next product. For example, in our case, it's car. So if it is FIFO, first in, first out. If it is very average, so we can use average.
Yeah. Okay. So definitely we need to judge what kind of method is the best for us, because there's another accounting principle, which is matching revenues and costs. It means that we can present the cost only when we have the revenue. So it's very important to measure the cost in the proper way. And in fact, in the accounting policy, we need to include the way of calculating the cost of interchangeable inventories in that case. So definitely we have in Poland 4 different ways of calculating the cost. First, it was first in, first out. So first delivery was on 28th of November. So we take 95 euro as the value of the wheel in that product. We have last in, first out. So last delivery was at the end of November. So we take 100 euro as the value of the wheel in that product. Or we can use the average price. And the last possible way, all wheels have QR code, or some other labels. And when we go to the storage, we take the wheel, we scan the wheel, and we know the exact price, the exact purchase price for that good, and we use it in our calculation, we use it in our account. So basically, we've got first in, first out, last in, first out, average, and exact price. And I've got a question to you, because you mentioned that probably it's in Ukraine. I don't know Ukrainian accounting rules, but probably in Ukraine you've got similar methods. So first in, first out, the average. Do you have last in, first out method?
No, actually in Ukraine, this method, LIFO, is forbidden.
Okay. So you just adopted IFRS, International Reporting, Financial and Reporting Standard, in 100%, because in IFRS there is no LIFO, and in Poland we have LIFO as the one of accepted method. And the problem is our nature standards of accounting is quite similar to IFRS. So IFRS was like a basic for creation our own national accounting standards. Okay, thank you. So I did a research in Poland, and I checked all accounting principles. I checked all details about the valuation of different asset liabilities in Poland, and I asked a question: which method is used the most often in Poland, and it was first in, first out method, and after that, the average. I don't remember that if any company provided information about last in, first out method. So probably it's one of the possible ways how to measure the value of interchangeable asset, but in fact, it's not used in practice. And of course, if we've got developed storage and we can, and with label of inventories that are stored in our company, we can, of course, use the last method, and we can take the exact precise price for each good, for each material that we use in our production. So basically, as I said, we have many national standards, probably like you in Ukraine. And in national standards, we've got detailed description of the most problematic spheres in accounting, in Polish accounting. So we've got a separate standards for cash flow. We've got separate standards for income tax. And in fact, it's not a problem of presenting the income tax, but the deferred income tax. We've got separate standards for long-term services. So there's a problem with measuring the profit and the cost related to that profit. We've got separate standards for impairment losses or write-offs of assets, mainly tangible assets. We've got separate standards for leasing contracts, for provisions and accruals as well, for changing the accounting policy, so adjustments of accounting policy. And we've got much more accounting standards. There's also one for biological assets. There's one for liabilities. So in some problematic places in Polish accounting, we need some explanations, we need some descriptions, and they are included in national accounting standards. Basically, in Poland, not all companies are obliged to use the Accounting Act. So basically, all companies, so commercial partners and companies, are obliged to fulfill all obligations that are incurred in the Accounting Act. Then, natural persons, civil law partnerships of natural persons only when in the preceding financial year the amount is over 2 million euros. Except this, let's say, profitable organization, so profit organization like companies, natural persons, or civil law partnerships of natural persons, we use the Accounting Act also for some municipals like gminas, powiats, voivodeships. So this is some units from the municipal of different districts in Poland. So basically, the Accounting Act is the rule for profit and non-profit and governmental units. According to Polish accounting rules, the accountancy, the accounting, it's not only preparation and presenting the financial statements that we described just a few minutes before, but also before that, we need to adopt accounting rules. We need to write, we need to describe how we measure assets, liabilities in our financial statement. After that, the next activity in accounting is keeping accounting books. And there's one question to you. Do you have a kind of chart of accounts that you use in Ukrainian accountancy, and it's obligatory for all companies? For example, in Czechia, in Portugal, there's a chart of account which is for all companies. So they cannot use different numbers of accounts in accountancy. Do you have the same system, or like in Poland, you don't have the official chart of account and all companies can choose as they wish? If, for example, liabilities are recorded on the account 202, or maybe 301, or maybe 507. How it's in Ukraine? Do you have the
Yes.
official chart of account?
Yes, we have official plan of accounts. Yes.
Okay, so you are lucky, because in Poland, when you change the position from one company to the other, you might notice that there's different chart of account, and you need to learn new numbers describing, for example, liabilities or inventories, or maybe some cost or profit. So in Poland, we don't have, for profit and non-profit companies, we don't have the official chart of account. But for governmental companies, for governmental units, we do have the official chart of account. So in all schools, in all municipals, there's the same chart of account, but it's only in governmental sector. So in private, there's unfortunately no official chart of account. So first we describe the rules, then we record all events in the accounting books. After that, we check if everything is correct, what we recorded, what is on the paper, and what is in the reality. And the next step is the valuation of assets and liabilities and determination of the financial result. So during that lecture, we'll focus on this point. So determining the financial result and valuation of assets and liabilities, and presentation the figures in financial statement. We've got two more steps in the accounting activities in Poland. First of all, it's just a kind of archive activity, so gathering and keeping all documents, and at the end, having the financial statements audited. So there's a group of companies that are obligatory audited by the auditor, and if you are a small company or micro company, you are not forced to be audited to fulfill the last point of the accounting activity. So the principles that are used in accounting, they're mainly around the main principle, true and fair view. So we are trying to present the in the best way, the most reliable information about the activity of the company and the results of the activity of the company. We've got also some accrual principle, which means that it doesn't matter if we received money or not. We need to present the revenue in that fiscal year when it occurred. So it doesn't matter if we received any money from the company. We need to present the profit in the year where we make a transaction. And in Poland, this accrual principle, it's one of the main principles. And for tax authorities, many times it's not acceptable. So when we have the accounting system and the whole accountancy, we need to divide the process of bookkeeping, of preparing statements into two different ways. First, for tax authorities, where accrual principle, in case of profits or costs, many times it's not acceptable. And for the financial statements, where we need to show all revenues, even if we don't get any money. So basically, here we've got balance sheet, so we've got assets and liabilities and equity. And the accrual principle means that we present, this is profit, and loss statement. So we recognize revenue only in the situation where we do not get any money. So in that case, the revenue means that we present some receivables, so different kind of asset than cash. And in case of assets, the future benefit almost always means cash. But in case of receivables, the benefit means that we can change one asset to another asset. So we can change less liquid asset into the most liquid asset, which is cash. So revenues are recognized even if we don't get any money from our customer, in fact. Next rule that it's very important for assets liabilities recognition in financial statements is matching revenue and cost. What this principle means? According to the Accounting Act, in order to match revenues and related costs relating to future periods and deferred revenues are included in assets and liabilities. So when we look at the balance sheet, we can see many assets. What they represent. So assets and liabilities and equity. So why we present property, plant, or equipment in balance sheet? Because the cost of property, plant, or equipment, or the equipment is a long-term cost during the whole usage lifetime of that items. So we cannot include all that costs in one financial year. So we cannot match revenues from one financial year with the whole cost of property, plant, and equipment and the truck that we are planning to use in 5, 10, or 50 years. So that's why we present some items in balance sheet as assets. So it means that we've got some costs that couldn't be included in a given financial year. So the cost of truck will be distributed and recognized in profit and loss account in, for example, 1, 2, 3, 4, in 5 years. So every year we put as the depreciation 20% of the value of the car. So the car, which is presented in balance sheet, means or represents the cost, the future cost that will be included in future financial years. And of course, except some accumulated costs like property, plant, equipment, inventories, or the truck, we've got also the cash, or we've got some items which represent nearly the cash. I mean the short-term investments or receivables. So basically in assets, we've got cash or nearly cash or accumulated costs that couldn't be presented in following financial years. Next principle that it's important for the recognition is the going concern. Why is so important? So we present financial figures with the assumption that company will be in the foreseeable future continue its economic activities on the scale that is not sustainably reduced and that it's not be put into liquidation or declared bankrupt. So if we cannot fulfill this principle, we measure all assets and liabilities in net selling price impact, so in liquidity method. So all trucks wouldn't represent the future cost, but the value of the truck will represent the selling price, so liquidation of that truck. Elements of financial statements. So right now we know the principles. I'm almost sure that you have the same principles as we have in Poland, because they are very similar to what we have in IFRS. But in case of elements of financial statements, our Accounting Act shows what kind of information we are obliged to present in financial statement. So basically, we present financial figures concerning resources and some funds in balance sheet, then obligatory for all companies and the governmental units is a profit and loss account and additional information, including the introduction to the financial statement, so main information about the company and the accounting policy, and some supplementary information and explanations for balance sheet, for profit and loss account. So the figures need to be explained in some way. Some companies also prepare a kind of statement of changes in equity, so entity's own capital, and some companies also prepare the information about, prepare a kind of managerial information about the assessment of the past, the present situation, and the future forecast for the company. So we've got a list of 5, 6, maybe 7 different financial statements, and some of them are with figures like balance sheet, profit and loss account, cash flow, and some of them are just a kind of description. So the additional information or managerial statement. In balance sheet, we present assets and liabilities. In Poland, we've got a template for all companies, and based on that template, which is as the appendix for the Accounting Act, we just present the financial data. So all companies in Poland present financial statements in the same template, using the same template. And in Poland, we've got an order of presenting financial figures. So in terms of assets or liabilities, we present from the least liquid, like property, plant, equipment, like intangible assets, and at the bottom, so it's on the top, and at the bottom, we present the most liquid assets, like short-term investments and cash. In terms of liabilities, we've got the same rule. So on the top, we've got equity, and we've got the liabilities. liabilities, long-term, short-term liabilities. So also we've got the same order. It means the liquidation. So the time when we settle down the liability. So short-term liability, long-term liability, and at the top it's a equity with no expiring date. P&L account. In P&L account, we present revenues, costs, profits, losses, and also we've got a special template for different kind of companies, and we can use only the template for presenting and for details of profits, costs in the financial statement. We've got two different templates for profit and loss account. First, we use functional costs. And second, we use costs with their nature. Nature-based costs. So what it means? It means that we have revenues, and in operating segment, we have depreciation, the energy, salary, wages, and so on. So we present costs with their nature. In punctual method, we've got the same revenues, and we present costs with their function. It means we present costs of sold products, goods. We present costs related to managing. So we present costs with their functions in the company. So this is the operating segment. And the difference is with the way of presenting costs. So nature-based costs or punctual costs. The second piece of P&L account, it's other operating sphere. Other operating sphere and financial profits, financial revenues, financial costs. So in some cases, we present separately financial revenue and financial cost. And for example, when we have investments, short-term investments, and we just sell the stocks or some other investment, then we present the result either as the profit or as the loss from that transaction. And next position is taxation. And at the end, we have the final result of operating. So it's net profit or loss, net profit or loss. So basically, it's up to the company if they choose the punctual way of presenting costs, or if the company decides to take the nature-based cost method. Additional information is also purely described in the Accounting Act. So it means that all necessary information which explain some figures from assets, liabilities, profit and loss statement, or cash flow statement, they must be included in additional information. And also, as for all financial statements, we've got a template, we've got the list of minimum requirements, minimum additional information, and all of them are as the appendix to the Accounting Act. Some companies are obliged to, or are forced, because it means that when we audit our company, we have some costs. So some companies are obliged to be audited, or to have financial statements audited by the auditor. And in case of most Polish companies, I mean smaller one or medium-sized, the financial statement is being audited only when at least two of the following conditions are fulfilled. So first is 50 people employed in that company. The second, total balance sheet value of assets or liabilities, it's over 2,500,000 euro, or the net revenue from sales of products, goods, and financial transactions. So as you can see, other operating profits are excluded. So net revenue from sales of products and goods and financial transactions are over 5 million euro. So when we fulfill at least 2 out of 3 conditions, we are obliged to have financial statements audited. So when we come to our assets and the definition, we need to point out that this is balance sheet, that we can present assets or liabilities in balance sheet only when they meet all criteria from definition, and recognition in a specific position in balance sheet. And recognition. So at the beginning, some of you mentioned that assets means some profits. So some benefits embodied in some resources. The second item from the definition of asset is that assets comes from or are result from past transaction. So we do not recognize assets in resources that we are planning to buy in the future. So all assets that we present in financial statements are as the result of past transaction. So they have some benefits embodied, and they are the result of past transaction. 3, we control the benefit. So it means that this is the definition of asset. Some resources from the past transaction with the benefit, and we control the benefit. So that's why we do not recognize some assets that we cannot control the benefit from them. And next step, when we just meet all criteria for from the definition of assets, we've got 2 more criteria to fulfill, to meet, as the recognition in financial statement. First, all assets are presented in the value. So we need to measure the value. And in terms of assets, mostly in Poland, it's the purchase price, or for some assets we can use per value or net selling price. So we need to measure them. And the second point for the recognition of assets is the probability of receiving the profit. So of receiving the profit. So even if we have some resources, even if we recognize some benefits from them, they are from past transaction. We control that resources, we measure the value of that asset, but the probability of getting money from that resource is limited. We cannot include them as the asset in balance sheet. So, for example, it could be receivable. So when we sell some product and the customer hasn't paid or settled down the due amount, so we've got invoice and we have receivable. So invoice for example, 100 euro. So having the receivable, we are expecting the benefit, the profit, so the money in the future. It's the result from past transaction. So it means that before I recognize the receivable, I needed to sell something. We measure, so we know that the value is 100 euro. But if the customer is under the bankruptcy process, and we are not sure, we are not certain that we get any money from them, we cannot include this receivable, this asset, in financial statement, because the probability of getting the benefit, it's very limited. And similar situation is in terms of liabilities, but except profits, in terms of liabilities, we accept to settle down some obligation, and we expect to reduce our assets, mostly reduce our cash or some investments. Okay, so I will just move quickly to some methods of measuring in Polish Accounting Act, and of course in IFRS. They're accepted in both regulations, but in Poland we cannot use some methods of measurement in specific assets or liabilities. So first, we've got a historical cost. So it means that it is a, for example, purchase price. So this is the amount of cash or cash equivalents paid to acquire some asset and to buy some resources. Then we've got current cost. So historical cost is the cost that occurred in the past when we bought something and put it initially in the accounting books. Current cost. So assets are carrying the amount of cash that would have to be paid if the same of an equivalent was acquired currently. So current cost means that, for example, today I would like to buy some equipment, and this is the cost of buying this equipment. Releasable value or selling price, assets are carried at the amount of cash that could currently be obtained by selling. So this is the different perspective. Current cost is a perspective that I buy something. And releasable value or selling price, it's the perspective that I sell this item to some other company or customer. Many times this is the same value. When there's the market, there's the same value, and I can buy and sell with the same price. But in theory, there are two different perspectives. And present value. Present value means that we calculate our future cash flows and we discount the value at the moment of preparing financial statement. So in fact, we've got 4 different methods. So we've got a bus, we've got a historical cost because we bought it for 1 million euro. We've got present value, which means that we calculate future cash flows from the ticket and we discount them at the balance sheet date. So this is the present value. We've got a current cost. So the amount that we should spend to buy this truck, and we've got also the releasable value or the selling price, which means that I can sell this truck with some amount. So 4 different perspectives, and we've got the same resource. It means the bus. So in terms of intangible assets, we measure the value at balance sheet date in initial cost. So it means in historical cost. So this is the main method for intangible and tangible assets, with some exceptions, of course. So an intangible asset shall be measured initially at cost, and we need to, according to prudence principle, we need to include also some impairment losses or write-offs or depreciation, and we cannot increase the value of intangible assets by cost of improvement, reconstruction, and so on. So it's only the historical cost minus write-offs, depreciation, impairment losses. So we cannot increase the value of intangible assets in Poland. In terms of property, plant, and equipment, we use the same method. I mean, the historical cost minus impairment losses minus depreciation. But in terms of property, plant, and equipment, we can increase the value of property, plant, or equipment by the developing costs. Long-term investments. So some assets that will generate some interest for us, or we keep them not for production purpose, but we keep them for increasing the value of that asset. And the value of long-term investments are divided into 2 groups. First refers to real estate and intangible assets classified as investments, and for the rest of investments. So basically, when we have the building, real estate, and we classify it as investment because we are expecting to resell it in future and get money from that, we can use the same rules that were accepted to fixed assets. I mean, historical cost minus depreciation minus impairment losses. But we can also increase this value by some development cost, some reconstruction cost, or in terms of intangible assets classified to investment or real estate classified to investment, we can also use market price or fair value, estimated by some experts. For other investment, long-term investment, we cannot use rules that are applied for fixed assets. We can use only fair value, amortized cost, or the purchase price less the permanent impairment losses. So we've got 3 different ways how to measure the value of long-term investment, and all of them must be included in accounting policy. In terms of inventories, we just discussed at the beginning. So we've got weighted average cost formula, we've got FIFO, LIFO, which are not accepted by IFRS, and right now I know which is not accepted by Ukrainian accounting rules, and specific identification of their individual cost, so the exact price. Receivables, we can present them in terms of loans and receivables classified to financial assets by the value of amortized cost, and the same situation is with liabilities, with some financial liabilities. We can also present the value of credit loans using amortized cost. So it means that we use the present value of future outflows because it's liability, or in case of asset, future inflows at the balance sheet date. So we've got a right, it's not an obligation, we've got a right to use the amortized cost. So basically, there are 2 different ways, methodological ways, how to present the value of financial liabilities or financial assets. First, we can call it historical or future. So at the balance sheet date, we calculate the amount that we need to settle down at the balance sheet date. So for example, we've got a loan 100,000 euro. So it means that at the balance sheet date, we present 100,000 euro plus extra financial cost because the interest were settled down in November. So in that time, we need to adjust the value. We need to add some extra financial cost, or we can use future outflows. So interest that we will pay in future plus the settle down of the whole amount of the loan. And I've got one example of that I would like to share with you of amortized cost. So we did it in a company where I worked a few years ago, and we issued some bonds. So for us, it was a financial liability. And the nominal value of that liability was was 30 million Polish zlotys. So this is the initial value of that liability. So this is the value that we record into accounting book at the beginning. So 30,000 euro. The amortized cost is the kind of present value method. So we check the interest that we need to pay in future. So it's 8 periods, 8 interest periods, plus at the end, we need to settle down the nominal value. So this is the cash flows which are connected to this liability. And first of all, we need to find the effective rate of future outflows, which gives on the balance sheet date, on the initial date, when we put to the accounting books the bonds, the nominal value. So it is IRR. So initial, or it is internal return rate. And we use this rate for all assessments at the balance sheet date in 2015, 2016, 17, 18, and 18 was the last year. So every time we calculated the amortized cost value using future cash flows. So at the end of December 2015, we have in mind future. So in 2016, 17, 18, 19, future cash flows. The present value of them, it's the value that we present in financial statement. And the difference between present value, so future outflows discounted on the balance sheet date, and this historical method. I mean, in historical method, this is the balance sheet date, 21st of December. So we have 30 million zlotys, it's a nominal value, and we can check in (2015), we received the money, so the nominal value, in August. Sorry, in August. So from 6th of August, to balance sheet date, so 21st of December, there are 147 days. So we need to calculate interest for 147 days and include in the financial statements value of this financial liability. And it's interesting that the difference between present value of future, so present value of future outflows and historical value plus financial cost, the difference between those two values is almost 1,000 Polish zlotys. So it's less than, so here we've got percent, so it's even less than 1%. So the question is, why we have two different methods of measuring financial liabilities, financial assets, where the difference in the value is so slightly. I changed the interest rate, so I just higher the interest rate and the margin, and still, so the interest rate is 15%, and still the difference between present value, so it's amortized cost, and historical value plus financial cost, it's still less than 1%. So it's still, from my point of view, it's insignificant. And I did a research in Poland on Polish companies, and we noticed that only in some sectors companies use amortized cost, so they use present value of future outflow in terms of, for example, leasing liability. And I think it wouldn't be a surprise, but those companies belong to financial sector. So my assumption is that amortized costs in terms of financial liabilities and financial assets are prepared and adopted in Polish accounting rules only by companies from financial sector. The other companies prefer the historical cost. Okay, so it's in Poland it's 1:24. So unfortunately, it's time for just stopping the lecture. So from my point, thank you for your attendance. Thank you for hosting me in Kiev.
Yes.
Unfortunately online, but I think that in future, nearly future, we will meet in person, and for some, and with some people who will meet in person in Wrocław, because we've carried on the project.